Interest rates going up, inflation rates through the roof. Is this the start of the end? Is this the crash we've been talking about for so long? Welcome to Momentum Property Education. My name is Daniel Wood. I'm one of the founders, and every single week we give you updates on the economy, talk about what's going on in the property market, the strategies you can use to create your cash flow, as well as other cash flow strategies. So please subscribe to the channel so you don't miss any of these updates, because right now we have some important updates to talk about. Because right now we have extremely high inflation all over the world. In Sweden, where I'm from, the inflation is currently at 4.1%. In the UK, it's at 5.4% when you don't even count the increase in the utilities, in the electric prices, the issues that are going on. This inflation is extreme. The goal is to have 2%. Which means with over 5% inflation, that means that carton of milk costs 5% more this year than it did last. Now, wages have not gone up as much, meaning people's cost of living, their available capital is going down quickly. This is a huge problem. The only good news there is that employment is back to pre-COVID levels. So we're doing good on the employment side, but the pay raises haven't come. So we'll see if that is something that will come. One thing we do know is that the Bank of England is starting to raise the interest rates. It's gone up to 0.25%. That's going to raise the mortgage rates, which might dampen this rise in prices we've had. The year over year in November, December is about 10% in the UK, meaning prices of housing has gone up by 10%, which is really, really high. It's really good for us as property investors. But will it continue? And what do we do as investors right now? Because that is the hard question. Where is the world going and what is going to happen? Well, about 24 months ago, we started talking here on the Momentum Property Education channel that we were going to have inflation, right? It wasn't very hard to see. They were printing money like crazy. And obviously that leads to inflation. More money, less value of each dollar, of each pound, of each euro, of each Swedish krona. So we predicted that this would come now. And I thought it was going to go quicker than this, but we're here with very high inflation and the governments have to do something. And what they do is they're going to be raising the interest rates. That will mean people have even less money to buy things for, which means people will have to stop shopping. Now, this is going to be rough for companies because companies are in a situation where they've been trying to, get back after the pandemic. They're starting to get some, upturn. Then Omicron hits and, they're down again. And now that, people are back kind of getting into the habit of going out for dinner, of buying new clothes, and, consuming again. Now we got interest rates going up, which will hurt people in their ability to shop. So for companies, this is going to be a rough period. And that obviously then has an effect on the market, wage growth, individuals, getting new jobs or unemployment increasing and so on. So it's going to be a very, very interesting time. Now, what do we do as investors? Well, the good thing with inflation is if you got debt, right? If you got mortgages, if you got loans, that means the value of that money is going down, right? If you borrow 100,000 and inflation is 5 plus, let's say 5, 6, 7, 8%, well, the value of those 100,000 you owe are going down by that amount every year. At the same time, inflation is a part of pushing up the house prices. So we should be in a position where house prices go up and continue to do so long term. Although short term now, we might have a little bit of a break on that high increase we've had because of the increase in mortgages. But essentially what we want to be doing right now is acquiring assets, acquiring as many assets as we can, get our money out of money and get it into assets. And taking on debt at this time is actually a positive factor because the cost of that money is going to be less than the inflation. Now, that doesn't mean take on stupid debt. That doesn't mean buy things at above market value or over leverage. It means be smart about it. But it's important to understand that right now, the cost of money is less than the depreciation in the value of that money. So it's a good time to be in the market, although short term, the prices might not continue to rise. So we got to be very, very smart about how we move forward. It's exciting times, and we're going to stay on this. We're going to keep an eye on what's going on with the inflation, what's going on in employment, what's going on with the interest rates. Right now, it looks like interest rates are going to go up. Inflation is going to continue. Employment is in a good space, but if they increase the interest too quickly, that can fall. So it'll be interesting to see how and where we go forward. We're going to be here to make sure to keep an eye on all these things and stay on all these supply shortages, the energy crisis, and all these other things that are affecting the economy right now. So please make sure you subscribe to Momentum Property Education, because this is an important time to make sure you know the latest of what's going on. So thank you so much for joining us. See you soon.